welcome to the show, Tavi. Great to have you back.
Hey, Coach, how are you? Thank you very
Uh,
much for having me. Looking forward to, and thanks for everybody, everything said. It was appreciate that those words. Thank you very much, and look forward to be here for
uh,
being here as well.
okay. All right. So Tavi's with Crescat. You probably see his lives on X all the time. Really known for, he's actually an excellent currency trader across the board in assets. I could ask him about anything, but as always, do your own due diligence. And these are just for educational purposes, and then you turn it into risk. That's up to you. So, Tavi, great to have you here. And why don't we start out with what's happening politically between the U.S. and Brazil? I hear that there's some friction occurring there.
Yeah, I mean, I think that's mostly perhaps a little bit of noise. One of those
Okay.
situations where you have a sell-off, and I think you should be seen as an opportunity, window of opportunity for many reasons. U.S. and Brazil don't really have a trading relationship like maybe Trump thought they would. I'm not sure what the letter was really about. It was certainly a very political letter more than the deficit itself. Brazil
Yes.
is running a surplus with the US, deficit with the U.S. But if you run the numbers on a lot of these things, it won't have a major impact economically as part of what the country relative to what the country actually does in revenues. Some companies it could, but I highly doubt this is going to stick. It's like a copper 50% tariffs. While I think this is wildly bullish for copper, it just, what are the odds we're going to be keeping those things there? It's just negotiation tactics. But yeah, I look,
Would you
Brazil.
would you sell copper based upon that? I know you're long-term bullish, but with fresh money, would you be patient and wait for a
Uh,
pullback to buy copper-related assets, or you just go in?
no, I just focus on the copper outside of the US that
Okay.
actually supposedly was supposed to have an impact. But if you look at Chilean equities,
Yes.
Chile, for those that don't know, it's the Saudi Arabia of copper. I mean,
Right.
it actually produces more copper globally than Saudi Arabia of oil. And
Interesting too. Yeah.
and so but if you look at the Chilean currency or the equities, behave quite well during that whole thing, which was a little shocking to me because it's the largest. I think it's 35% imports of that the U.S. imports of copper. So
Okay.
my view is if you're looking for a trade on that idea, I would say focus on things that are outside of the U.S. because that's unlikely to stick. Once that comes down, they should have a positive pop. Now, the copper price here in the US, yeah, it could have a negative impact, and maybe today is a little bit of that. I don't know, but yeah, I mean, at 11% increase,
In
it,
a
it's
day.
it's sort of
Yeah.
mixed, right? Because
Yeah.
because on one side you can say it was related to this, the other side it just broke out. I just
Right.
believe it broke out. So
Got you.
and I don't want to be stay in front of it. So
Yeah.
yeah.
Okay. So, why don't we talk a little bit about how things are going at the mine? I've, put up silver. How many years ago was it? I think that we were trading in the low 20s when you decided not just to do something on paper, which I know you do, but you really wanted to own the asset, and people were warning you. If my memory's correct, must have been around October in 23 when you tied it up, and silver was 21, and everyone was saying, Tavi, don't do it. The silver's weak; it's going to 18 or 15, and um, the type of independent thinker that you are, you went ahead with it. So how are things going? You say, it's not easy to run a mine, is it?
Oh, well, I think, look, conversations has started back in 2021. We closed the deal, like literally the papers and everything was probably January 2023.
Okay.
One of our partners became the CEO. I work very closely with him actually because it's a real balance sheet. I mean, just this year we're probably on pace what we pay for it was call it, between 250 and 300 million because there's some deferred payments and things like that. Let's just call it between like 270 or so.
Yeah.
Um, More close to 250. Like this year, if everything goes the way things are with prices at around 33, 34, of which we all know it's not, this already made it's on pace to make about 380, almost $400 million in free cash flow. So yeah, it's
Privately held, right?
privately held. We
Yeah.
we have it's extremely tightly held as well. We own majority of it, and our goal is to develop other things with the mine. We've been in a acquisition spree recently as well of mines that we like. I think I'm not sure if I shared this with you, but the one metal I love silver, and I already have probably, well, you never have too much. Every time you see prices going up, you feel like you should have more. But one
Right.
metal that it's I think it's off the radar is zinc. Zinc
Yeah.
prices,
Yeah. You
yeah.
you went to you purchased a zinc mine too, didn't you?
Well, this mine is also one of the largest zinc mines in the world, but we've been also focused on zinc just because zinc is the more we do research on this, the more we realize how critical it is. And if you start investing in precious metals and copper and other metals, you get into the exploration or junior space that those called. And
Yeah.
um, when you look for zinc assets, good
Can't
luck.
find
There's
them.
like a handful of them because there's not a lot of new discoveries of zinc, and so we like those when we find them. We've been in an acquisition spree with a company looking for those assets right now.
Okay. So let's move to other asset classes. So
Hmm.
a quote that I have from you the last time I talked to you, and we were talking about the markets, and that was during swoon time, right, or right around swoon time. And I asked you, I said, what would you do with the market? And you said, I'd get long VIX I'd get short VIX under 20. So did you follow through with that idea? I mean, you could always reassess, but are you short anything with the VIX under 20?
Yeah, we've been increasing our shorts right now. I think the biggest one, it's not even VIX, is actually the junk bond spreads have really tightened up. I
Yeah,
think
okay.
that's an even better way to express the same idea. So that means
Right.
you're just buying insurance in your portfolio. Like I'd much rather do that right now than when VIX is above 30 or 40 or 50. So yeah, it
Right.
just sounds like I mean, if you're making money in other things, um, I think that's the right thing
It's
to do. But
yeah,
why
it's
not?
insurance you hope you don't have to collect on, like homeowners fire insurance. You don't want the house to burn down so you could collect.
The
You
the
just have
more
it. Yeah,
Yeah,
go
and
ahead.
the more I learn about markets, it's like I'd rather not spend time trying to figure out the next 20, 30% drop and try to figure out what's the next 10 bagger. Sounds to me a lot more better use of my intellectual time, to be quite honest. And so, but we all know risk. And so
Yeah,
this is great for you to manage risk for the next 6 months. It's highly unlikely we see, spreads staying this tight. So you might as well take a 6 month play on this because I do think, well, look, one thing that has not played out yet, it's played out a little bit, but not really that the way I thought because I had a high conviction on this. I had a high conviction 6 months ago or so on the dollar, and I had a high
yeah.
conviction on the 2 year yield. The dollar has basically moved in anticipation of that move on 2 year, but I think the 2 year has a lot more to go lower. I don't know if I'm in a crowded space because the more I talk to people, a lot of people
Yeah,
agree with me.
everyone's looking for lower rates.
But at the same time, look, it's become a lot tougher to find those opportunities. I think look, gold has had a big pullback recently that looks attractive. I've been focused on the derivatives of gold a lot. The emerging markets, I think some of them had a pullback. Brazil had a pullback recently. I like pullbacks in the middle of big trends. I mean, that's to me, that's where you make most of your money is taking advantage of noise. So,
Yeah,
um,
you were constructed Brazil for quite some time. In fact, you said on a visit to see your family in Brazil, and someone asked you what you liked, and you said Brazil, and they
yeah,
kind of shook their head in disbelief, and you were right. Um,
well, yeah.
anything
I
that you're doing with the real or anything in the currency markets that is offering opportunities?
I purchased a real estate there
Okay,
in January, right at the peak, like sort of very early January, late December. I was negotiating, and then I bought it. What's the intent? Is to have part of our lives there, just because I do think it's going to be uh, the next one in line to start moving. We're probably going to see major shifts. The catalyst would be elections next year, in my view. And we're in the process of seeing a less crazy Malay get into place. If you like Malay, you're probably going to see something a lot more constructive, even in my view. I like Malay, by the way. I think that's the catalyst for Argentina, although it was cheap, it needed a catalyst. And when that started to become a trend, Argentinian equities began to move way before elections. And then I think we're in that world right now in Brazil. It's starting to de-risk as we see the other Tarcísio is his name, is the other political leader. He's the governor of São Paulo, and I really think he's gonna gain momentum. I mean, the left is basically done. I mean, there's Lula, who's 85 years old. He's got cancer.
yeah.
He can barely speak his mind right now. And there's nobody behind him. It's just I think there's a real asymmetry on that idea that is just not priced in markets. Look, what's happening in the US is fascinating, Coach. I mean, it's sort of what's the gap between US and emerging markets as far as free markets? Have you seen what happened yesterday? To me, that I'm just going on because it's critical. This whole NP materials. Were
No,
you
I didn't. Fill
NP
me
NP?
in.
Yeah, it's a rare earth company that received a 15%, well, I should say a 400 million and $1 billion, basically capital infusion into the company. Was basically the DoD, the Defense of Department of Defense, now owns 15% equity on a rare earth company. And I was very curious. I was like, well, that's strange. How,
Yeah,
they own 15% of this? Sounds like emerging markets when they, say,
yeah.
well,
Nationalize when they
yeah,
nationalize, right?
and that brought my attention. I was like, all right, when was the last time this happened? Do you have a guess?
The Civil War,
World War
18.
II. I mean,
Okay,
that was, and that was not even, I mean, it was a substantial amount, inflation adjusted. You're probably talking about $250 billion of infusion of capital
yeah.
that went through not one company, multiple factories to make sure the factories are still running during
Wo-
World War II.
Yeah,
Look, we're not in World War III, but this is interesting. The level of extreme. I mean, the prior things, and people sometimes tell me like, oh well, no, we did see no, not of this degree. Tell me a 15% stake of this in the last few decades, and there isn't one. There's grants. There's
yeah,
you can see bailouts, companies that
yeah.
this is not the case. It's not a bailout, it's strategic investment in a company. So I think
It's nationalizing an industry, isn't it?
yeah, and it's the beginning of something because
Yeah,
when the government starts one of these, they're going to be now looking at, and my thought was, okay, well, how much cash they have? Like, who's buying this? Is that the
unlimited.
treasury? Or like, where is it sitting at? So is a treasury balance sheet? Is it because nobody knows this. Like, I don't think anybody has run through the books on this. And I was like, well, how much capital do they have, and start looking at they report a balance sheet, unlimited capital. They're going to be they
Unlimited cap. Yeah.
it's so
So the Fed owns it.
I don't know.
They're going to finance it.
I don't think it's the Fed. It's the
Treasury.
Secretary.
Uh,
The sorry,
but,
the
yeah.
Secretary of Defense is the one that makes the decision. They have a council that makes the
Oh
decisions on
my goodness.
investment that goes through it, and then the government approves it. The Fed is not involved with that, from my
Yeah.
understanding. And then
Okay.
once it's approved, they go and purchase. But like 15%, all right, if you own a company, okay, you have a 15% owner, like is are they part of board discussions? What type of involvement is I'm guessing they will be very involved because it's there's a reason why they got involved, right? So
Yeah.
it's just very strange, I have to say.
It's yeah. I mean, we've crossed the Rubicon in many
Yeah,
areas here in the U.S. Is that also your reason for wanting to have uh, political,
Brazil.
geographical diversification in
Oh,
Brazil because of what you see happening here?
well, I think there's a lot of reasons. This is just sort of one of those that just adds to your case, but
Yeah.
that nobody, it flew completely off the radar yesterday, and I thought was relevant to discuss. But if you think about it, what Trump is facing right now, and the administration is something. The fiscal side is important. So you have you're basically running a deficit of between 6 to 7% of GDP, depending on the month. If you remove let's just say you take interest rates to zero and you say we're not paying interest payment anymore, you're still running a 4% deficit, which is higher than what is desirable. And so, and then okay, well, the fiscal is a problem. So you're probably going to have to do a few things. You're probably going to have to reduce rates substantially. And then on top of that, you're going to have to reduce that primary deficit, which is the deficit excluding the interest payment. All right, well, if you look at that deficit itself, inside of that, there's two things. There's non-growth spending, there's pro-growth spending. The pro-growth spending
Right.
is everything else that is not, it's defense spending is one of them, and others that are not part of the entitlements, basically. And what we're seeing inside of that budget is that it's shrinking the pro-growth. Now, more and more it's been shrinking, and the entitlement has been growing, and then you have the interest payment has been growing. So what's probably going to do is that they're going to have to do some radical changes at some point, and it's going to cause the pro-growth aspect to decline. But the pro-growth spending in the U.S. is probably the largest in the world still, in terms of the large developed economies. Therefore, why you see this exceptionalism in markets. But I just think that that's impossible. And then on the other side of all this is the exports and import side, where we're running a call it 3 to 4% current account deficit today. That's mostly trade
Yeah.
balance. So that's
Right.
where Trump has been focused on, obviously. But if you looked at throughout history, the last time we saw this was in 1800s, like 1900s, this type of deficit. How do you fix a deficit? It was pretty, I think you can come up with better terms. You can, kind of research some industries like auto. Why do we
Yeah.
not have GM and Fords running in Europe, for instance? That can probably change very quickly. Single PE ratios that can see growth. Think about that. That's another idea there. Steel producers in the US, all these large industries that are not participating as much in the global markets could become participants. But how do you change this? Historically, has been through devaluation of the dollar. And
Yeah.
I ran the numbers myself. I was like, all right, well, which ones are the largest? It's Canada, it's Mexico, and then it comes China when it comes to the deficit that the US is running. And the numbers I ran were really looking into, what happens if we just want to fix that deficit between US and Canada, for instance, not through great agreements, but rather through a devaluation of the dollar. And yeah, you got to understand the elasticity of those agreements and all these things. You get to a point where you start learning that the currency has to appreciate 50+% to see something like that. And I do think that's probably going to be the case, but not today. It's probably going to be in the course of years. So
So the peso would appreciate
yes, Peso and
Okay,
Canadian dollar.
50% like to 27.
The peso was closer to 30 and the Canadian dollar
Okay.
was closer to 50. Um,
Okay.
I really believe I know this is just one factor. There's other factors that will play into this, but I can throw another one that will play into this that might exacerbate that trend is the need for the US to cut rates and they're going to have to. There's no way around
Yeah.
it. So once they do, interest rate differentials are probably going to reflect in FX markets too. So I'm looking for any dollar
Rally.
rise to short. I'm really
Okay.
am. And I think there
Well,
could be
you
one
have one
here.
right here. Are you
Yeah.
going for it or it's not enough?
I think you want to be scaling in. Yeah. I look, I like as you know, I don't have crystal ball when these things turns, but I don't think the positioning, I think I looked at the positioning for the Canadian dollar specifically, and it's not heavily owned at all. Whoever said that is just not right. Maybe the euro, maybe the Japanese yen are crowded, more crowded, but not the Canadian dollar.
Okay. So you have to differentiate, Tavi, and because a lot there have been, I think, in the COT reports, the most bears shorts in over 20 years. So
Yeah.
I thought that might be some fuel or gunpowder for some type of short covering rally. But uh, Canada's starting to give it back. Um, so
It's possible, and it's one of those things where you tactically take a move but structurally you stay with the view, and
yeah,
that's certainly the case right now.
okay.
Look, I'm not pressing crazy right now because I know we probably had a big move already.
Yeah,
But
we
that's
have.
something I'm watching, that's something I'm
Okay.
watching because I want to press on that again. Like I really think it's going to be a moment to press again on that trade.
Okay. Any reaction or thoughts about I think it was a week or so ago where the repo market they had to do a big number at the Fed discount window, and the last time that happened was like 2018. You notice that story, and does it mean anything or it's just noise?
I noticed it, and I think we can be cute and trying to understand these things, and they're just so complicated. But yeah, but it's just things are so complex on when you
Yeah,
when you reach these levels of leverage that you have problems, occurring on many fronts. And the Fed is all we know is that the ones that are going to solve these things are the Treasury and the Fed. And when
yeah.
you see these spikes, is probably something crazy going on. And this is why it's just so difficult to be pounding the table on something in regards
It's
to the
it's
market
harder to
falling
have
apart.
conviction. It's
Yeah.
harder to have conviction right now, isn't it?
Yeah, I mean, I'm struggling a bit right now just because I had a strong conviction on a lot of things, and I think a
Yeah.
lot of things have moved my way, and I'm just oh, I have conviction on one thing actually, that I think it's important to be. I don't understand that market as well because I've been wrong about it, and I sometimes when you're wrong about something and right about other things, what you do is you end up focusing on the things you've been right and so forth. And but I'm a little bit opposite in that case. It bothers me when I'm wrong. I'm trying to understand why, and I can't figure out necessarily what's really wrong in my view. I just have a strong view on how geopolitics are worsening. And if
Yeah.
I would take
Okay.
a thermometer of that, oil has to be in the forefront of as an asset class that should be reflecting that, and it's not. And I hate the stuff that happened with the war recently because
Yeah.
everyone is talking about the asset and it becomes difficult to invest. But I'm noticing a lot of resilience in the oil producers, and I've also if you study
You like Petrobras,
I do
buddy?
like Petrobras, although it's more of a state-owned company as well.
Yeah. Yeah.
It's you can take the U.S. If you're not if you're
Here's
worried about this,
Here's Buffett's pick, Oxy.
yeah, that's a great pick.
Yeah.
I like more. I guess, but you can see EOG.
Okay.
EOG
Okay.
is interesting. I like XLE, the ETF. I have call options on XLE right now that
Okay.
I've been buying. Why have I been? I just want to explain this because it's someone has to understand my risk. My risk is that I think maybe I mentioned this with you, maybe not, but if you notice gold to oil ratio and silver to oil ratio, it's at
Wait. Yeah.
one of its highest levels in history. So think about being a miner and your risk is what is that energy cost goes higher and eventually squeezes your margin. So it's like I kind of don't want oil to go up, but at the same time, it's my risk. So if more than junk spreads widening is oil going crazy. And if you understand commodities and how the bull markets evolve, they rotate among themselves, and one is
Right.
the next flavor of the day. And oil has been out for a long time in that rotation. And it
Yeah.
wouldn't shock me at all if we're back to $100 a barrel, 150, $200 a barrel in a year from now. It wouldn't shock me at all. I'll be like, yeah, that makes sense. That's how much risk is out there geopolitically today. And so it seems like a cheap
Well,
call
that
option.
would that would be, do you agree that most recessions in the US in their history have been preceded by oil shocks?
Yeah, that's indeed.
Okay,
Um,
so that's going to be the nail in the coffin
it's very
for the
possible.
economy.
It's very possible.
Okay.
I like to do the way I invest is I like these big trends, identifying these big trends, taking advantage of noise when you see the noise in trends, or positioning when things get too crowded and maybe more like the dollar recently, but um, and sometimes you have these opportunistic moments of buying things that are really, really cheap that you have a very strong view on. And I think you can take energy producers. XLE is a great example. I could see that breaking out here. It's been consolidated. If you look at the long-term
Yeah.
chart, it's been like in its
Yeah.
line consolidate. I love those things. You never know what the catalyst could be, and it's just waiting for one, really, in my view. And it probably will break out at some point, and everyone will be talking about it. So it's sort of, yeah. I mean, by the
How
way,
about
mhm.
if you want to talk about an out of favor market, Tavi? And I'm not recommending the use, but the cannabis stocks
Hmm.
are coming out. Do you
I
look
don't
at them
follow them.
or just yeah?
I'll
Anyway,
write it down
they're
though.
down 90%, and
Really?
there's a potential for a re-rating of the scheduling of marijuana. And all these companies, they can't bank, they can't do anything. So just something, you've given us a lot of pearls. I thought I would, give you
I
an
appreciate
area
that.
because I don't, look at that chart.
No,
Okay,
I
it's green
appreciate that. I
thumb.
don't know much about cannabis, but um,
All right.
out- outside of having
Okay.
some friends that like to consume it.
Yeah, I was gonna say I could teach you.
Honestly, I prefer having some whiskey and wine, to be
Uh,
honest, but
all right,
I
everyone,
respect whoever does it. It's fine. It's
yeah,
whatever, it's your life.
pick your poison. That's what I say. But you know what? You are not. You are an antidote to the thinking that many people have that it's really kind of they need grounding from someone like you. And, I recommend people go and check out your website. And anytime you're on X doing a space, which spaces, you do that quite a bit. And if you're not listening to Tavi Costa, you're missing a voice that could really change the way you look at markets and see things that he sees that you wouldn't on your own. And that's the importance of intelligence gathering. And Tavi's top of my list. I,
Well, feeling is mutual, my friend. Thank you very much. Yeah.
I really
Um,
appreciate the early hour for you to make it here and
that's fine.
coming to face and edifying us today, Tavi. Um, a lot of respect, and I hope that things work for you and your clients, and this is going to be a bumper crop for you this fall when you're harvesting your investment gains.
Well, thank you very much. It's been, the investment world is a lot of times lonely, and that's how it feels because that's when usually onto something. You just got to be in a lonely area for some time, and then try to express that view as best as you can, and then when the crowd comes, you say
Yeah,
goodbye.
yeah.
So
You know, I don't like to be lonely in my personal life, but I certainly don't like a crowd around me when I'm positioned in the market, buddy.
uh,
So thanks again, Tavi. It was great seeing you and talking to you. Appreciate it. Tavi Costa, everyone.
thanks for
And
having me.
follow him for sure at the minimum on X. He puts out a lot of great tweets. And that's going to be a wrap for us this week. Thanks, Tavi. Remember, don't just count your pips, count your blessings. And, it's nice to be a mile from the beach instead of the desert for a few months. So I'm going to be rejuvenated
Ooh,
this summer here. So everyone have a great weekend, and we'll do it all again next week. Lay it all on the court for you. Bring in great guests like Tavi. So
thank you.
don't just count your pips, count your blessings. Adios. Thanks, Tavi.
Adios. Bye bye.
Bye bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.